Wow, guys, we got two insanely incredible articles to go over in this video. This one says AMC stock, a string of new box office records are annoying its bears. And after this, you will feel a little bit more bullish or a lot more bullish about your overall long position in AMC for the MOAS. The other article that we are going to more briefly take a look at is why Jim Cramer says people should not be shorting AMC Entertainment. I think both of these articles are phenomenal. This really gives you a sense of why you would not want to be short on AMC right now. This is very bullish for anybody holding AMC for the MOAS. So with that being said, guys, my name is Tyler, or the Creative Investor, whatever you guys want to call me. Drop that like on the video, consider subscribing to the channel. Let me know down below in the comment section, what do you guys think about all of this information? Are you ready for a massive rally possibly coming this week? And by doing all three of those things, you engage with this video, help push this out to even more apes that need to hear this information. So I don't want to waste any time. Let's get straight into it. Like I said, AMC stock, a string of new box office records are annoying its bears. Summary, AMC is enjoying a string of new pandemic-era box office records. This has comprehensively dismantled the bearish arguments that movie-going is dead. With its fundamentals improving and its stock price still trading at a strong premium, AMC needs to make radical moves to eliminate its debts, which is exactly what it has been doing. Now let's just read a little bit of this. First, it was Shang-Chi and the Legend of the Ten Rings, which brought in a domestic cume of $207 million, establishing the film as the highest grossing movie of 2021 and 2020. Then the Venom sequel opened to $90 million domestically at the box office. Not only was this a pandemic-era record, but it also surpassed the opening of its 2018 pre-pandemic predecessor. If that was not enough bad news for the cinema bears, No Time to Die opened in the United Kingdom to bring in the highest opening weekend takings of any James Bond movie in history. The film opens in the United States on the 8th of October and is expected to repeat its success. For AMC Entertainment, this string of movie successes renders its post-pandemic future more certain than its bears have suggested. Their dated core argument has been the total destruction of movie-going demand as at-home entertainment systems and streaming websites replace cinema screens. For now, this argument now looks to be dead. Thursday, September 30th through Sunday, October 3rd saw AMC set a new post-reopening record for global attendance, ticket revenues, and concessionary sales. With Dune, Spider-Man, No Way Home, and The Matrix Resurrection set to be released during the fourth quarter of this year, AMC is likely to finish 2021 on an incredible strong note. This literally makes me emotional. We have been in this trade for so long. To see us being right about this is incredible, and it's just validation to all of the hard work, due diligence, and patience that we have all had. So you guys should definitely feel a sense of pride when you're hearing this information, when you are seeing AMC, seeing what we did. We saved the company. We saved thousands of jobs by a bunch of random people that don't know each other coming together for one purpose. It is really incredible if you think about it that way. Let's continue on. Further, the future of streaming as a medium for high-budget movies has also been called into question, with Disney walking back on commitments to release its movies straight to streaming without an exclusive theatrical window. This creates the foundations for theaters to remain gatekeepers for high-budget blockbuster movies. Movie-going in the post-pandemic era, AMC has been able to aggressively recover revenue from its why do I keep saying that? Pandemic era lows, with total revenue for its fiscal 2021 second quarter coming in at $445 million, up 200% quarter over quarter and 2,242% year over year. You guys could take a look at this explosive revenue growth, and this is something that we all knew was coming, but the bears of AMC, the short sellers, they did not think this was happening. Let's continue on. However, gross profits came in negative at $125 million for its latest reported quarter, albeit an improvement from a loss of $250 million in the previous quarter and a loss of $320 million in the year ago quarter. AMC's current financial picture can only adequately be described as being in a state of relative flux, moving from its previous pandemic disrupted state to a healthier state of positive gross profits and operating income. This cannot come quick enough, as consecutive earnings of negative operational cash flow put the company's future at risk. With capital expenditure at $18 million during Q2 2021, free cash flow is negative at $252 million, which this is not bad whatsoever in the situation and the position that they are in right now. Adam Aaron did say by sometime next year, they will be a free cash flow business yet again. That means they are being able to pay all of their debts, pay all of their bills, and still have money left over. The short thesis is all gone at that point. Literally, there's not a leg to stand on if the company is now making money after almost being bankrupt. Pretty self-explanatory. It says, while this was absorbable as a result of AMC's cash and equivalents as of 1.81 billion at the end of the quarter, it will fast run out if the company is unable to move into a more prudent financial state. This risk is especially heightened with the nearly 5.5 billion in long-term debt AMC held on its balance sheet at the end of the period. Admittedly, the company's current valuation is also high, with a trailing 12-month enterprise value to sales ratio of 32x. However, this drops to 11x when more applicable forward financials are used. So it's not too overvalued. This is something that I've been saying for a while. That's why the fundamentals do matter. At 11 times, trailing 12-month revenue, not bad whatsoever. This places a significant premium on current shares, leaving a somewhat non-existent margin of safety for current AMC bulls. Indeed, it is primarily a reflection of the company's status as a meme stock and its shareholder base comprised of apes, which are retail investors bullish on heavy shorted stocks. These shareholders are less focused on current financials, but on future earnings and its technical underpinnings of the stock. For AMC apes, it is somewhat time to celebrate. The recovery of moviegoing is a triumphant vindication of cinema bulls who doubted the narrative that streaming was going to wholesale replace what has been a strong part of American culture for decades. Hence, for AMC apes, the story is not one of financials, it is one of the broader macro environment the company operates in. The notion that cinema going has no place in post-pandemic world now seems to be dead, as an expected hybrid model of movie consumption comes to fruition. This now forms a sore point for bears, who now have to argue fundamentals with a group of shareholders that are entirely fixated on short squeezes. Essentially continues to go on how this is a great thing that AMC has been doing so well. I will link this down below in the description if you guys want to take another look at this for yourselves. I do apologize for stuttering around quite a bit. I am going to get my daughter today, get my little sidekick, so I don't want to take forever cutting and editing this video. So hopefully you guys can bear with me. Hopefully you guys get some value out of this nevertheless. So the next article, why Jim Cramer says people should avoid shorting AMC Entertainment. I know you guys aren't a fan of Cramer. I'm not whatsoever. I don't listen to anybody's, price predictions or what they say to buy, but I do think this is very interesting that he is saying this to a wide range of people, and a lot of institutional investors, they pay attention to what is said. They will make trades based off of this. If something is featured on Jim Cramer's, Mad Money or just on CNBC whatsoever, it does tend to have pops or drops based off of what is said. So CEO Adam Aron is daring people to try to short AMC Entertainment stock ahead of its highly anticipated release. Jim Cramer said Friday on CNBC Squawk on the Street, he's basically just daring people to short him. Cramer said, who do they think they are to bet against Adam Aron? Aron took to Twitter Thursday to boast about AMC's Entertainment's positioning ahead of the No Time to Die release, and we have went over this, so I don't want to go into that too much. Hashtag choke on that. Very, very funny. It says Cramer noted that 80% of AMC Entertainment stock ownership comes from individual investors as opposed to institutions. The current valuation makes sense, Cramer said. Co-host David Faber asked Cramer how he could argue that AMC Entertainment's current valuation makes sense. In quotes, "I'll tell you how I make that judgment. If you wanted to sell 5,000 shares right now, you could get it. So it makes sense to me," Cramer responded. Adam Aron is playing offensive. Don't go against Adam Aron. Very, very interesting. We're seeing Cramer start to lighten up to the apes. Maybe it's all the pressure, but nevertheless, this right here could give AMC a pop coming tomorrow. Overall, the picture for AMC has never looked better, especially in between $37 and $40 per share. An incredible time to be picking up shares, in my personal opinion. So that is all for this video. Hopefully you guys get a good sense of where we currently sit on a fundamental basis, why the short sellers are screwed at this point. We're not going to see a fundamental drop on AMC anytime in the near term future, so they will ultimately be forced to cover 20% or more of the outstanding free float. that is sold short, which is not a thought in their minds, or just ride this out and continue to see that cost to borrow percentage eat away at their portfolio. So essentially at this point, they are screwed. Drop that like on the video, consider subscribing to the channel. Let me know down below in the comment section what you guys think about this information. Remember, keep it positive and respectful. We are not tolerating any negativity to divide apes in the comment section. If you don't agree with this, provide your thesis, provide something for us to have a conversation about, but we are not arguing down there. So hopefully you guys do respect that. You guys like the video, subscribe, all that stuff helps push this out to even more people that need to hear this information. That's all for this video. If you guys do want to support the channel, links to do so down below in the description of this video, as well as the link for the buy and sell alerts. You guys will be notified every time a trade is bought or sold in real time with stock, options, and or crypto. So that's all for this video. You guys enjoy the rest of your Sunday, and I will see you in the next one.